Welcome to Lighthouse Outlook, the podcast where we talk less about the markets and more about what matters to the people navigating them. From family offices to founders, we go beyond the numbers to unpack risk, legacy, and the human side of capital. Hosted by the team at McNichol & Associates Asset Management. Okay, welcome everyone. We've got a very interesting podcast as part of our series here. We have the honor of having Elaine Ellingham, the CEO of Omai Gold Mines, with us today. That has probably one of the best stock tickers, OMG.V. And we're going to hear everything to do with her company as the CEO of Omai Gold Mines, about Guyana, and we're going to cover a lot of territory here. So hopefully you can keep up. And as always, write in if you have any questions or comments or any parts that you didn't understand. Next slide. This is to keep our lawyers happy. We've got a Canadian disclaimer for our Canadian business and a US disclaimer for our US business. We are not giving financial advice here. Do your own research. And if you need financial advice, come and talk to us individually. That's the only way we can do that. Okay, next slides. Now, if you're not familiar with Omai Gold Mines Corp, this is the return. It's been astronomically good. So this is a good news story today. We're very fortunate to get in the early days, thanks to a gold analyst that we've worked with for decades named John Eng of Maison Placement. And John brought this to our attention, and you're going to learn over the course of this discussion and podcast why we made this decision. So our early adopters got in early for our accounts who can take on some risk. And now it's pretty broadly held by our clients, except our relative strength clients that we only do ETFs. So I hope that's clear for any clients listening in. Okay, that's probably good on that. There's some disclaimers for Omai Gold Mines as well. I'm just going to do a brief introduction on myself and then pass it over to Elaine. For those who don't know, I'm David McNichol. I'm an engineer by training. I got my engineering degree at the University of Western Ontario. And after I graduated, I went straight into finance. And so I've become, as I joke, more of a financial engineer. And I've worked across the many different firms over my career, always on the buy side, which means I don't get paid in commissions. I get paid in management fees. And so if the accounts are going up, the clients tend to be happy, and so are we, because our management fees are going up. So we find ourselves much better aligned with our clients than many other advisory firms. I went out on my own. It'll be 25 years this September. Started McNichol & Associates Asset Management. We've grown quite well. We do everything from stocks. We're not that fond of bonds right now. And we've got an award-winning alternative asset platform that's over 15 years old now, 15 years of audited numbers. And we have the Canadian rights for a firm called Universa that offers downside protection. That's another whole webinar on its own. So if you want to learn about that one, reach out. Personally, I'm very blessed to be married almost 40 years now, 3 adult children, 2 grandchildren. I had 2 granddaughters. I can't believe it. So life is very good. Elaine and all of her work has made life even better. So I'm going to pass it over to you right now, Elaine, and take it away.
Great. Thanks so much, David. Yeah, I'm Elaine Ellingham, and similar to you, I have a technical background. I'm an exploration geologist, and I started out in the field. I didn't turn to the dark side like yourself. I stuck with it. My passion has always been exploration. But when you're working as an exploration geologist, it's a very cyclical business. We run with the commodities. And so I always say that during the bad times, I worked for major mining companies. I worked for the Ontario government for a spell. And during the good times, I worked for juniors, because I believe junior exploration companies, we are the ones that find things, and we can be more nimble. we can get out there and, sometimes just run on a hunch. But the thing is, when you have a lot of experience, it seems to work. And Omai is a good example of that. So yeah, I have a master's and an MBA from U of T, University of Toronto. And yeah, I guess one of my dreams also was, from a young geologist perspective, I learned pretty quickly, as you know, David, that you need the capital to do exploration, and it's speculative capital, and it isn't always there, but you have to get to know the market. So I early on really hope I loved watching the stock market, the stocks, and so I always wanted to work for the Toronto Stock Exchange. So mid-career, I ended up working for the Toronto Stock Exchange, and I was there for 8 years. It was pretty exciting times, and I worked on the listing of companies from all over the world, and then I ended up marketing the TSX all over the world in South America and China and Australia. So yeah, and then when I left the exchange, I was a consultant, listed sort of. I had my bucket list, listed a few companies, did a spin out of an Aussie company, but my passion has always been exploration. So I knew about Omai when I was a geologist because it was a very famous mine. And so just things happened. So I ended up being invited to join the board once this went back into a public company. And a couple months later, they said, hey, you should be running the company and do that exploration thing. So, I mean, it's been absolutely a spectacular experience. And I always say I have 40 years in the business, and my secret to finding gold, David, is something I've learned over time. And what it is where there's gold, there's more gold. So when you're looking at a historical past producing mine, take a good look because there's probably some more. Yeah. So Omai's, we've been working on it for almost 5 years, and we went from essentially zero ounces to 6.5 million, and it puts it way up there among the largest undeveloped gold projects. Yeah.
Great. Well, I've got a second reason to thank you. We've owned the TSX in many client accounts for many years, and it's been an excellent compounder. Owning these stock exchanges is a great business onto its own. I know one fraternity brother who's a manager, and that's all he does is own stock exchanges around the world. So it's good business. Yeah. Well, maybe anything else on your personal background before we get into these slides?
I guess it's, I mean, a lot of exploration. I've got a great team of people here, and they're all the same as me. They love exploration, they love the mining business, and each one of us has a very diverse background. And so we have a very close knit team. We have a great team of people down in Guyana, and so I do spend quite a bit of time down there. Less so now than I did at the beginning. Yeah, I know I like to travel. I golf, but this is Omai is really, it's taken a bite out of my golfing time. And I do have a place down in Tucson, which is absolutely gorgeous, but I haven't seen it as much as I'd like to.
Actually, before you get into the slides, why don't you talk a little bit Guyana? A lot of people don't know even where it is, if it's safe, who its neighbors are, things like that.
Sure. If you turn forward one slide, I don't have a lot of maps in there. I guess it's back one. Just in the title slide, I put a little picture because you're right. A lot of people confuse Ghana, which is in West Africa, with Guyana, which is in South America. So it's actually up on that northeast edge of South America. It's immediately east of Venezuela. Its claim to fame is it's the only English speaking country in South America. And in fact, it's considered more part of the Caribbean. So when you go there, it's the former British Guyana. So why it's advantageous to us as Canadians, at least, is it's really got a derivative of the British rule of law. So something we're very familiar with. When I say it's English speaking and it's very Caribbean, it feels a little bit more like going to Jamaica. They have that Creole accent. Very small country, population less than 800,000 people. So as you can imagine, you get a lot of FaceTime with the ministers. It's a good thing. You feel that you're integrated into the business community very quickly. I guess the other very unique thing about Guyana is they discovered offshore oil in 2015, not that long ago. And of course, the oil business is a little easier than mining. Drill a hole, you put a tap on it, away you go. So they had cash flow from that by 2019. Exxon is the main participant there, and so The fascinating thing is because of the small population and the size of the offshore oil, Guyana is going to have the highest GDP per capita of any country in the world by 2027.
That's amazing. And Exxon's doing something like 1 billion barrels a day. Is that correct?
A million barrels a day, yeah.
A million, excuse,
Yeah.
1 million barrels a day.
And next year it's already destined to for 1.2 billion million, sorry, you got me
Million,
going,
yeah. Sorry, I got you.
which is so interestingly, you asked where it's located. It's immediately east of Venezuela, which of course has been its own little hotbed of news and politics. So people were concerned because Maduro, who's the president, was the president there. He was sort of threatening that half of Guyana really belonged to him, to Venezuela. And so there was a bit of a ruckus there. It really didn't affect the safety or any issues in Guyana. It was sort of just getting himself profiled on the world stage, but it got some investors a bit nervous. It was all about the offshore oil. So at the end of the day, we know what happened to him. He's no longer there. I would say that the presumably increased stability in Venezuela means that investors are no longer concerned about that. I've been going there for 5 years. It's quite safe. I mean, it's like the city, you don't wander certain areas, that's for sure. But when you get to the interior where we are, they're just nice country people, delightful people.
Great. Okay, well then why don't we get into your slide deck?
Sure. Yeah, absolutely. Yeah, I mean, obviously, I include this just to give you an idea. This was a past producing mine. It was the largest primary gold producer in South America when it was in production. But why I put this in here, if you look at the gold, that you're looking at the gold price chart. So this came into production when the gold price was just $400 an ounce. And it doesn't look, because of the scale now, you can't really see it. But after they got into production, the gold price sagged. It actually touched down at about $250 an ounce. So the records show that they were still profitable, but you got to imagine one, it modified how they mined the deposits. They were very selective because, every time the gold price would fall $25, they'd go, we better just take the highest grade sections. So they, you can see it was a fairly large operation and it was producing an average of 300,000 ounces a year. So it was a big mine, only produced for about 12 years. And that actually is part of the story for Guyana because just remember, we were talking about the offshore oil, but before the offshore oil, Guyana was one of the poorest countries in South America. So we always say it was one of the poorest countries, except for when Omai was in production. And it employed 1,000 people in a country of 800,000. So this asset means something to every Guyanese you ever meet. They will know the Omai property. And it was the time when the country was affluent, other than since the discovery of offshore oil. So anyway, I mean, it actually ended up being shut down. It was the company that was running it was bought by Omai Gold, and the property reverted to the government. And there it sat for quite a while. And so when we came in 2019, that's when the permit was first granted. It was kind of, obvious the site, you can see the site, it was still cleared. It's not, I always say it's perfect for a mine because it's not pretty. It still really looks like a mine site. So it's easy for us to work. The trees didn't regrow or anything. So yeah, so we've been working since then. And just, the first part though, David, it was a tough market. And, I think you were financing, helping finance us. And we built up and built up and nobody seemed to notice that we were building up ounces and building the resource. And then all of a sudden we got the tailwind of the gold price and people kind of woke up and went, wow, this is a big project. And we've got bigger since then.
Excellent.
So
And one other little small detail, the transportation to get there, get the gold out and people in and so forth. What's that like?
yeah, and I think that might be the next
Oh,
slide.
coming up?
And
Okay.
yeah, you're like getting one slide ahead of me. No, actually, I'll talk first about this. So as I mentioned, we started to like we've been drilling pretty close to nonstop for 4.5 years. We take off a month around Christmas and New Year's, and into January, but basically we've been just working at this. Costs are quite cheap down there. The cost of drilling is a fraction of the cost that you would pay in a place like Nevada or a lot of places around the world. So it's actually very economic to drill. But our one deposit, you can kind of see, you're looking across at them. The Wenot deposit there, we actually have 4.7 million ounces. Historically, they mined about 1.4. So we just found it went longer along strike of the deposit and deeper, and we still have not found the bottom. And the other deposit is more like a cylinder. It's an intrusive rock. And they mine the upper part, and now we know that there's underground below that. And both of those, we haven't found the bottom of them yet. So we are looking at about 6.5 million ounces in those two deposits, but it keeps going at depth. We'll talk about, you can see there's a little line there from one deposit to the other. They're very close. So the two deposits are actually only about 450 meters apart, which is, it's not the only place that happens in the world, but from a mining and infrastructure and like building a mill and everything, it's actually great. So we actually drilled a hole through the one deposit, kept going, and we actually tested 700 meters below the Wenot deposit there, and we still hit the zones, and we hit 7 gold zones. So just spectacular to what it means for the future and how many ounces might actually be on this property. Yeah, so we can look at the next slide there. Yeah, I'm still not getting to the road, David.
That's okay. It'll come.
So not to dig too far into geology, but basically this is the right kind of geology. These are what we call the greenstone belts, and they're very, very old, very similar to what you see in Ontario and Quebec that host some of the big mines, like the Big Detour mine, that's the largest mine in Canada, producing almost 1 million ounces a year. This is the same type of greenstone rock. So you can see it in the map there. And basically there are quite a few other mines that have been discovered, some of them even 10 million ounce deposits. So you always say, it is location, location, location. You want to be in the right geology, and we are. Again, I just mentioned, I met the president, I think 4 or 5 times. When he talks about mining and mine development, like, they're very enthusiastic because they know it brings jobs to the interior. So the offshore oil creates jobs for the coastal people, mostly in suppliers and procurement, but they realize that in the interior, mines create jobs in places where otherwise there's very little. So the president's totally on board to see Omai and the communities as well. Yeah, so I've just got some pictures there to show you. We have an airstrip on site, which is kind of a luxury for a project at this stage. You can see the top right, that's some of the old warehouses from the old mine. They were supposed to be pulled down. We're very happy they weren't, because we house about 60 people in there, and we log the core. We have our offices in there. It's basically everything in one. They're like airplane hangars. And you can see that the forest never regrew. And that's a good thing too. You can see the road there, fantastic road that we will talk about. I haven't worked on many projects that have a road that looks like that goes by them. So it's a prize. And then the bottom right, that's the old tailings facility, and we've done studies, so we know actually we can reuse that and expand it. So that's a big win as well.
How long of a flight is it from Georgetown there?
It's only about 40 minutes.
And
And
you
you can
drive?
fly.
Is there a road to drive all the way to?
Yep, there is. And you can see it there. You can see Georgetown there. There's actually 2 airports. Technically, they're both international airports, so we can fly from either one. Or we can drive down, and most of that road is now paved. So we'll talk about Linden. Yeah, we are definitely the best located project in Guyana. Oops, I don't know what happened to the other map. Okay, actually, let's go back a map. Then I might have just left it out. Nope, onto the road map there, one forward. Yeah, so that road you're looking at, that goes down to Brazil. And Brazil's another 300 kilometers south of us. But that's the only real road into the interior in Guyana. We're only 10 kilometers off that road. The government has a very aggressive plan to turn that into a trade corridor down to northern Brazil. Because if you know your geography, northern Brazil actually, there's Boa Vista and Manaus, and they're both sort of bread baskets, and they're also industrial centers. But because of the Amazon, they're kind of cut off from that route. So they go all the way to the east, out to the mouth of the Amazon, and then they have to come all the way up to the north to get to the Panama Canal. So the vision that the government in Guyana has had for quite a while is to bring that road, upgrade that road down to Brazil, so that they can come up there. It's about 450 kilometers, and they're building a deep water port. They've already got the causeway out into the ocean, and that's going to accept those big Panamax container ships. And so what they want to do is they want to be that trade corridor down to northern Brazil. And we're 10 kilometers from that. So pretty convenient. So for us, we can drive down from Georgetown right now. It's not paved the last little bit. They're still moving forward, but we hope to be paved to within the junction anytime now. They keep moving forward. Interesting, Linden is the second largest town in Guyana, and just a little piece of tidbit. That's got a big bauxite mine, a big open pit bauxite mine that's been in production since 1916. So as you can imagine, lots of open pit mining skills. So you can expect that would be the source of most of our workforce. Okay, should we move on there? Yeah. So I know you aren't geologists. A lot of people are geologists, but maybe it's just that I love looking at these things. But you're looking from above down at the deposit, and all those red lines are our gold zones. And this is a huge deposit. From point to point, we have defined about 2.5 kilometers. So I always say, if you think of where you are and think of a point that's 2.5 kilometers from you, this is massive. And so we've identified the deposit down to 450, 500 meters. And also it's very wide. So I've worked on a lot of gold projects, and often you get 1, 2, or 3 zones. We have about 12 zones there, 2 or 3 major zones, but still it just keeps on going. So, that's why I say we've succeeded in almost everything we've done. The only thing we've failed at is we've failed to find the limits of this deposit. It just keeps on going. So it is time to move it forward to the next steps, because at for this 4.7 million ounces, it's time to move this forward towards a mining scenario. So we're going to keep expanding, but we also have to keep everything else moving. So yeah, so again, I know if some people don't have too much context, they don't understand, how much of a wow this is. But you're looking at this from the side, you can see all our drill holes there, and this is what we call a long section. So you're looking north across the deposit. So you can see it goes down to about 500 meters, and the purple dots there are all over 5-gram intercepts. And to give you an idea, as you know, David, a lot of these big open pit mines, they're under 1 gram these days. And so our average grade is about 1.5, 1.6. Probably after our next resource, it might nudge a bit higher. So this is a really healthy grade for open pit mining. I like showing this slide because you can see also, again, remember, our economic cutoff for rock that has enough gold in it to take it to the mill would be about 0.35 grams per ton. 0.35 grams per ton. And if you look at those assays there, we've got lots that are actually 5 grams, 13 grams, 3 grams. So some very, very robust grades here. And then if you look down at the bottom there, you'll see the arrow pointing down 700 meters. That's that one little hole that we drilled way, way, way down there. And that was a 2-kilometer hole. And we'll talk a bit about that. That's why I like working for small companies, because we can do those sorts of things. And this geological setting, I've done this before, drilling deep underneath these. It's called a shear hosted deposit because in a sort of a rock shear. And so, there's things that could have happened. It could have been faulted off or otherwise, but in fact, we hit 285 meters of the shear down there and 7 gold zones. And when you think a drill hole's like 2.5 inches, it's amazing. And we hit it, and we hit the gold zones. And what it kind of suggests there is, it's one hole, it's 700 meters down. You can't really say much, but the shear is there, the geology continued, and up above, it's 2.5 kilometers long. So it does suggest that even though we currently believe we have probably a 15, 18, 20-year mine life, that suggests that maybe much, much more. So yeah, so this is just to show you, this is kind of a look at that deep hole. Again, you're looking across, but now you're looking at that Wenot deposit, that shear hosted deposit from the end. And so when you look at that Wenot gold deposit, that would be coming in and perpendicular to the screen by about 2.5 kilometers. And there you see our other deposit only 450 meters away. So we've put on top of the other deposit would be underground mined. It's got 1.8 million ounces, and that's like a cylindrical deposit. And the gold comes usually from below, so you would expect that gold's going to continue deeper and deeper. But we already have 1.8 million ounces. That's enough to build an economic mining scenario. So because we would have to drill from surface, those are long holes. It makes more sense to keep moving forward on that. And once you get your development ramp down there, that's when you do more exploration. But you've got enough to, once we get our economic study, we're pretty sure we have a scenario that would be economic. So we've put the mine plan on there, and as you see, this is a ramp from surface, and then that would spiral down on the south side of that deposit there on the left, so that you could run an exploration drift out to the other deposit at depth. So there's lots of room to expand this. One drill hole down there, you say, wow, what does that mean? But it is kind of a proof of concept that that deposit continues. It's kind of it's amazing, you know. But you know what I call them, the no guts, no glory holes. So, and you hold your breath at periods of time, and also because it's a 2 kilometer long hole, that's a long hole. We almost lost it a few times, so everybody in the whole team, you hear them kind of go, oh, and then the drillers go, no, 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 we're okay, we got it going again. It's like, oh, okay. So while that hole was being drilled, there was a whole bunch of ups and downs in the emotion as we were going to make it, we're not going to make it. And actually, we did not get to the other side of the shear. The hole finally crapped out. You can see how flat it got. And so it crapped out at about 2,014 meters. We were still in the shear, and there was actually visible gold within 5 meters of the end of the hole. But we were happy. Who knows what was beyond that, but we were happy. Yeah, so that's why we say this is a huge system. So yeah, okay, so like we're just talking about what we're doing now. So we are doing more drilling because also, as you know, you classify resources by how tightly they're drilled. It's like building inventory. So because we were trying to see how big the deposit was, we were doing fairly wide spaced holes. And so now to actually do a real, like to do a preliminary economic assessment, that's fine. And that's what we're doing. So we're coming up with a resource within within the next few weeks. And then we move to the economic study. And that's going to be about 2 months after we release the mineral resource estimate. And then that our work is actually done. That's in the hands of the consultants now. And so the work we're doing now is to push forward to the pre-feasibility or feasibility study. And so this shows you some of the work that we're doing on that. We have to do an environmental impact assessment, but because this was a mine before, it's going to be fast tracked. The government, the EPA in Guyana is fairly small. They know this project extremely well, obviously. And so they've been, they have a lot of insight into what's required and are very helpful. But we've hired a big international firm, and they actually are responsible for doing the study for us. We monitor and we're involved in it. But we've done a lot of water studies. And as you know, for the environment and mining, a lot is about water. It rains like 2.25 meters a year in Guyana, lots of water. So we've sampled that. We worked with the communities. We've done the consultation. Metallurgy. So that's another area. We already know it was a mine before. So we know the recoveries were 92, 93%, a lot out of a gravity circuit. And so the expectations are the same, but just to have the confidence, we've got 73 samples in at a Canadian metallurgical lab, and they're doing the test work on all of those. And what that does is basically it de-risks the project. In other words, you want to look at what are all the things you need to know. What could possibly go wrong, and you want to be able to check that out, right? So that's what we do. We go through anything. We go, yep, okay, the metallurgy works. Let's make sure it still works if we go deeper and on those deposits. So that's what we're doing. And then on the bottom right, that's our mine that would be underground. So for underground mining, you have to look at, how good is the rock? Because, if you're doing underground mining, you want to make sure that the rock's got integrity. It's not going to collapse. It's not going to, that you can actually ramp down into it. So what you see in the bottom center is actually a really cool system. Down those deep drill holes you put down a probe that does both optical. It takes pictures on the outside, the 360 degrees of the hole, and acoustic. So basically, you get a complete log of every crack and fracture. It's state of the art, and so that's what we've been trying to do, is just the best work for this project. And then the tailings, as I said, we did a 4-month study on that, and we're really quite fortunate to be, not too many undeveloped projects have existing tailings. So it's, sorry, that's a bit long, but we're running forward and trying to move everything because the government wants to see this redeveloped. And my view is, if somebody opens a door for you, run through. So yeah. So the milestones, obviously, some of the drilling we're doing now, you'll see. Maybe it gets boring for you, David, but we just keep hitting good results and good results and more good results. But that's music to our ears, because it means we're building the resource and we're verifying the resource. And so that's really important. The PEA, the preliminary economic assessment, super important, because that is going to be integrating and putting an economic plan and a mine plan around the two deposits. So we're going to be developing a plan that has the underground and the open pit. So what you would normally do is you would start developing the open pit because it's easier. And while you're doing that, you would ramp down and you would start your development work on the underground. The open pit would be in production first, and the underground probably would start production maybe 3 years later. Yeah, so lots of drilling, some interesting exploration targets, and then the permitting, really important to get the permit, because that will allow us to get a mining license. The metallurgical work, again, that's important for just understanding the recoveries, because if you can, especially in this gold price environment, if you can even get another 1% recovery, it's money in the bank. Yeah, so as I said, we move forward as fast as we can, and we have about 39 million US in the bank, and so we're pretty well funded to keep running.
How long will that cash last for?
It depends how fast we can move. So really, that takes us up to some of the aspects of the environmental permitting. We need to see what the terms and scope will be coming out very shortly. Our proposal is with the government, and then they tell us what we need to do. Depending on that, there's a budget there that is sort of a question mark. Don't expect it to be more than maybe $1 million. But we are trying to start into the feasibility. So we probably can get most of the way to a feasibility study, but I think we'll have to probably be doing a financing somewhere before that. And anything we can move faster, we will. So definitely keep us through to the early stages of finishing up that feasibility.
Can you do any what if scenarios here? And no one's going to hold you to it. And anybody listening in, these are all just guesses, best guesses. But what happens if a major comes along? How will this schedule here on this screen be short-circuited?
Well, I guess, as you know, a lot of the gold producers are making money hand over fist. Their costs haven't escalated or inflated much, and they're selling gold at twice what they were a year and a half ago. So yeah, so they're accumulating cash. Investors are now looking for them to expand production. They're looking at, for safe jurisdictions, projects that can be permitted quickly and into production. So yeah,
Obviously,
we are of the size that attracts not just the mid-tier companies, but some of even the larger companies. So, I guess it's all about optimizing, maximizing shareholder value. So if that happens, hopefully it comes with a huge premium to market, because I do think that I think a major catalyst is going to be the PEA, because it's just going to be, we're very conservative, as we have to be, because there are certain levels, but we're probably only going to be using a 3,000 or $3,500 gold price for our economic study. But even at that, I think we're going to hit it out of the park. So it's all about getting the appropriate valuation for our shareholders, right?
Mhm. Well, that aligns very well with the majors, who are all very ultra conservative and have to be, just to keep marching on. Yeah, and Ken Reed, one of our portfolio managers, just did a write up on. Oh goodness, Ken, you might have to jump in here. It's either Barrick or, anyways, just the margins there are incredible, like 91% margins, and they're just cash flowing so much. Hopefully, they could be a partner in this. Not Barrick, but any one of them could be a partner in this down the road. That would be nice way, and you wouldn't hold up that process, right? You're not the type that has to do this all yourself right to the bitter end.
No, it's, I mean, my team is predominantly exploration people. We have a couple mining engineers. But the other thing to consider is that, single asset companies, the cost of capital for building a mine like this is not nearly as good as the big boys. And the other issue is, when you're building large assets like this, you don't have a revenue flow from other mines to, if you've got a delay and even a piece of equipment coming in through customs or something, a key component. It is not saying that small companies can't develop projects like this. They can. I think it's important. A lot of people, I would still say, were profoundly undervalued. And, again, initially people were iffy, thinking, oh, yeah, you're just drilling under an old pit. It's clear we were not just drilling under an old pit. We were like, remember, this was shut down during a really tough time for the gold price. They did not do any exploration, and they were very selective because they had to be. So, I mean, they left so much behind. I think we are, uh, probably people don't look at PNAVs. That's what a lot of the analysts look at, and a lot of them have us down in the 0.15. I think one is down to 0.13 NAV, price to NAV, and a lot of the takeovers are happening at zero point 0.4 PNAVs, and so we have a lot of growth, and I think the catalyst of that PEA is probably going to be a yet another wake up.
Okay. We should probably wrap up on these slides so we can just get to some final questions.
Yeah. Yeah, sorry. Yeah, so this just shows. So, yeah, I mentioned we were number six, that we were the sixth highest performing on the venture exchange. I do update these graphs periodically, David, but the plus 486% in the last year, it always seems to, like, I've been doing that for the last several months, and it's always that. So, I think the venture exchange said we are up 540% in 2025, and I think we were up close to that in 2024. But so you kind of say, well, how can that be? But not only were we expanding the resource profoundly, we had the huge tailwind with the gold price, so it was kind of a double whammy. But in some ways, I feel that we didn't get the appreciation of expanding the resource, because it was kind of lost in the sauce of exuberance with a rising gold price. Yeah, so we have about 670 million shares outstanding, a lot, almost no warrants, and then the only dilution is the options, and it's like 8%. Yeah, so we've been trading. I think our peak price is around 210, 212, something like that. Gives us a market cap in Canadian dollars about 1.3 billion. One of our peer company, yeah.
No, I didn't say anything.
So yeah, so I mean, good liquidity. And so I think I did the recent one, the last 3 months trading. We're actually trading 2.6 million shares a day on average. And that basically means that we've been able to attract some of the funds. So the Mackenzie funds in Toronto have been in this almost since day one. I knew them from another company I worked on. Franklin Templeton's been a big participant in the last two financings, Van Eck, Rothschilds. We kind of have the who's who of funds all the way down, including yourself. So yeah, no, it's been interesting. Lots of these people, the fund managers have been down to site. We hear that it shows well. It is very easy to get to because you get to the international airport and you catch a nice plane, you land on our airstrip in 40 minutes and you're there. Yeah, so we've got analyst coverage and that certainly helped the exposure. I think you can see their share price targets. Their targets are anywhere from, I guess, 270. I think that 275 has come up as well, up to $4 or 440. So let's just see, and that's based on their projections of where our PEA is going to land. So we'll have to see where that.
Well, you'll have to add the Bank of Montreal there after your discussions with them in Miami.
Yeah, and actually the BMO analyst came down to site as well.
Good.
Yeah,
Good.
for sure. Yeah,
Is that it?
sure. Yes.
That is. Okay. I couldn't remember if that was the last slide. So let me just rapid fire a few questions for the final 10 minutes here. That was on the coverage. You just talked about that. Talk about how they value ounces in the ground. It used to be in the olden days, they were valued at about $200 an ounce. Now we're seeing as high as $500 an ounce. Does that sound realistic?
I haven't seen any analyses recently, to be honest. Yeah, it's often market cap per ounce. I think we're sitting there at about 140 or something like that. Market cap per ounce. Yeah, I mean it's obviously gone up, and all the other issue that overlies that is sort of the risk profile of the country that it's in, right? Like if you're in some of the countries in West Africa right now, I think it's probably in the 200, 250. And if you're in Canada, it's probably like 600 or 700. And I think Guyana is closer to the Canadian than the West African, right? So, yeah, I would say you're probably about in the ballpark of 400 or 500 an ounce. Yeah.
Okay. Where do you see the price of gold moving forward?
Yeah. Well, it's interesting you say that because I've never been a real gold bull. When you work in the industry, I mean, I always say you have to prepare for the worst and hope for the best. So, mines and projects like these are long-term projects. So you always have to take a conservative bent with respect to how you manage things. For me, I like Omai because the grades are pretty good. The infrastructure's there. You got the government there. You're not going to have a long permitting time. So basically, I think Omai is a go at $1,600 gold, and that makes me happy because the rest is margin. So I mean, I must admit, for the first time in my life, I actually think that like gold, where it is, it has some stability at this level. It's hard to envision a situation where it's going to come down a long way, even if the world resolves all the various wars in so many countries that we can't count anymore. And also, I mean, obviously, the U.S. debt situation is there. I think there's some fundamental things that changed. We could dive into gold, but John Ing is far more knowledgeable on this and follows this. Actually, I don't know if it was John that said this to me, but a couple decades ago, somebody said, I have no doubt that gold is going to be $5,000 in my lifetime, but I'm not sure I want to live in a world where the gold price is $5,000.
That's right. Nick Barishev wrote a book, $10,000 Gold, and he believed that up to his last breath. Yeah, no, it's really a problem. We've been investors in gold ever since I opened the doors in 2001. My old partnership wouldn't allow it. That was run by an American who many Americans find gold just you know not investable because it doesn't produce an income.
Right.
Neither does farmland, by the way, either, unless you start planting and putting money into it. But yeah, so we've been investors since 2001 in physical gold. $284, I remember, was our entry price. And our main rationale in 2001 was that the US government was too much in debt. And
Yes.
so imagine how we feel nowadays at these incredible debt levels that are not going anywhere but further up.
Well,
We'll keep moving along here. Do you see activity becoming more likely now with elevated gold prices, or are buyers still waiting on the sidelines?
good question. Yeah, 100%. I don't. I mean, now that the gold price has reached a bit of stability at say even $4,500 to $5,500 gold price, Yeah, there is pressure now on those majors to expand. They can't expand through organic exploration themselves. So yeah, it's into acquisitions. I think they need to see some stability in the gold price before they're going to start the M&A. And what's coming first off the shelf is production. And so what's been a bit of a sideline is there's a couple projects that are either past producers or end of their life producers, and those are flying off the shelf because people want as close to production as you can get. So there's some of the majors that have spun off some of their their non-core assets that are producers. And those ones, it's a bit of a feeding frenzy. They're going for some ridiculous amounts, but those aren't going to last for long. As soon as those are done, they are going to start looking for where are the projects that can be permitted quickly, right? And in safe jurisdictions. And that's why we believe like we're right at the front of that line, right? So I think that's inevitable. I mean, we've even seen some CEOs change over in some of the majors. And I think that's because during kind of the dry spell in gold, some of these major companies, they became very risk averse. And like when you're in the mining business, it's hard to expand if you're very risk averse. And so I think they were into, people told them, don't worry about production levels, just, go for operating margins. So they got rid of all their exploration teams 15 years ago. So, I mean, they actually became entities that weren't growth focused. And now suddenly overnight investors are saying you got to be growth focused. So we are seeing a transition, but some stability of the gold price. And of course, in industry, our idea of stability in the gold price is a little different from investors. Like, we don't worry at all if it goes down $50 or $100. That's nothing. When you're up at 5,000, 4,000, this is music to our ears. Any stability up in that range is going to get those majors starting to look for projects just like ours.
Okay, final question. And this comes from a female client of ours who's been following you closely. Quote, you've had an incredible career, are very accomplished, and have done an amazing job with Omai Gold. Was there anything in particular you did that allowed you to excel in a male-dominated field like mining?
That's a bad question for me.
It's a tough one to finish off.
I mean, I guess maybe I just came out of the wrong mold, but I mean, I graduated from university in geology like everybody else, and professor helped me get my first field job. I didn't know what I was getting into, fell in love with it. By the way, I'm almost 5'3", so I'm kind of small too. But no, I mean, I know lots of women in the mining business, and I mean, the question I particularly like is when people ask me, what's it like being a woman in the mining business? I always say, well, I don't know, because I've never been a man in the mining business. So no, I mean, I mean, as a lot of people say, if you're passionate about what you do and you're good at it, I mean, I've always wanted to learn more and more and more. And I believe it's a team thing. So the people that work with me, I mean, I think we have a lot of fun because we're all very passionate and we love what we do. And maybe it's because we found so much at Omai, it's kind of a little bit exhilarating. I always say that I think mineral exploration is the best business in the world. It's better than drugs and alcohol. So, no, I mean, when we pull a good hole, I mean, you just down at camp, you should see. You have a choice when you can either turn right in the morning. We get up at 5:30, and you can go right to the kitchen and get your coffee and breakfast, or you go left and you can see the core that comes in the morning. And I tell you, when we're drilling some of the good holes, every single person in the geotechs, the young geos, they wake up, they open the door, and they head for the core shack to see the rocks. Like, I don't think it's gender specific. It's it. You just have to love what you do, right?
Well, maybe it's an unfair question,
It's an unfair question.
but it's one of the reasons why we did decide to invest with you and your company. So keep up the good work, and we'll be watching the headlines and looking for any hopeful announcements. And yeah, just all the best. So thank you very much for taking the time today.
Yeah, thank you.
Thanks for listening to Lighthouse Outlook. If this conversation sparked a new perspective, share it with someone who thinks differently. Subscribe for fresh episodes every 2 weeks and visit mcnichollasset.com to learn more.